Now let me bring on board Adrian Lim, Senior Investment Manager with Adrian Asset Management. Aberdeen Asset Management has investments of about $10 billion in Indian equities, and they are one of the largest institutional shareholders of HDFC Limited, HDFC Bank, Hero Honda, and then TCS. Adrian, always a delight to have you back on ET Now. Adrian, of late Indian markets surely have rallied from a very important technical level, and you are a long-term bull of Indian equities. But at the current juncture, do you think Indian economy is under pressure, as one side consumer demand is slowing down and on the other hand earnings are also under pressure?
Yeah, it's a little bit of both, right? And I think you do have to be very careful about which stocks or where you put your money for the medium term. You do have to take a medium-term view because there's too much volatility, not just in the Indian markets, but in the global markets as well, to really take a short-term bet. It is a bet, or it is a gambling call, and it's a short-term view in this current state of affairs is not really an investment. And that's something that's very difficult to see. There are companies that are bucking the trend, though. Having said all this and having noticed that macros are soft, there are companies that are passing on costs to their consumers, maybe not necessarily dollar for dollar, but in consumer staples, for example, the companies with stronger brands, they can pass on pretty much quite a bit of their inflationary or their factor price increases back to the consumer. Now, it might not happen the exact moment that they get hit with inflationary costs, but over the medium term, some of that will go, a substantial amount of that will go back to the consumer. And you see that in companies with strong brands like Nestle and Godrej and Levers.
Adrian, now as a house, you have a very large exposure to financials. Now, financials are always considered to be a proxy to GDP growth. So at a time when GDP growth is coming down, do you think it makes sense to trim exposure to financials as a group?
We do have a large position in financials. It's either the top one or top two within the Indian portfolio at any time. But it is less than the benchmark representation of the financials. And it is interesting that you say match. We try, it will take a cue from the GDP growth numbers as an indicator, but we expect them to perform, the ones that we hold, we expect these stocks to perform much better than the GDP growth numbers. Stocks like HDFC, stocks like ICICI Bank, we expect them to perform at a multiple of what the GDP growth numbers are at. So they may follow each other in trends, but profitability and margins, if you are selective about what you hold in financials, can outperform GDP numbers, and that's what we expect of our holdings.
Adrian, hi, morning. You have a large exposure in HDFC, like you just pointed out. Would it be right to say that your bullish stance towards HDFC in the next 3 years is likely to stay?
I mean, all of the stocks that we hold with at least a 3 to 5 year time frame. So it wouldn't be HDFC alone that we expect would do reasonably well during this period of time. You are right, we expect them to continue to do well, and that's on the back of quite a few things. They are operationally very strong. Their capital management is conservative and informed. And the most important thing is their franchise or their reputation within the markets very solid, and this allows them to do very steady business even when times are difficult, even when interest rates do not move according to what the consumer would prefer. And we continue to see them increase their business presence over a medium-term time frame. But HDFC is not alone. We expect that of our holdings.
So you have a large exposure in ICICI Bank as well. Do banks, or rather do their exposures or large exposures to power and infrastructure sectors worry you at all?
It does give us cause for concern, but you know there's no perfect stock. And we like the way ICICI Bank has over the last few years been accumulating capital, and we are comfortable with the way they've approached their exposure into these sectors. We don't expect them to be aggressive here, but if there is a sensible risk return, we expect them to take a reasonable approach and tap into that business. I think ICICI Bank over the last few years have been very committed to strengthening their balance sheet, have become more conservative in the way they have mapped out their portfolio mix, and we take comfort from that. It is also a pretty large group in India now, and inevitably it will take on some of exposures in sectors which are a little bit more cyclical, and the management team are aware of these things, and it's a risk that they do need to manage. We don't expect, it would be silly for us as shareholders to second guess management and tell them not to do certain things. We get the best management teams that we can invest in, and then we must give them the chance for them to go out and execute on the plans.
So do you have an eventual price target for ICICI Bank and HDFC?
No, we don't. The reason why we don't is because it's a very fluid environment. It is not an absolute call on valuations. It has to be relative to what the Indian market is currently offering. It has to be relative to what their financial peers or competitors are currently offering as well. And then you have to mark that with the relative quality of these companies. So we don't have an absolute price target. Every day that target actually is a dynamic one, and it's something that we have to monitor.
Okay, Adrian, let's talk about your exposure to Infosys. You have a pretty sizable exposure to Infosys as well. But based on Q4 numbers, I guess it is evident that Infosys will grow at a run rate which is much lower than the industry average. Does that bother you, and are you thinking twice about owning Infosys now?
No, we take a long-term view on our stocks, and it's no different for Infosys. Infosys has had a very long and stellar history. Over the last 2-3 years, though, it has hit a speed bump on the way it does things. And they're trying very hard with the reconfiguration of the management team members to address these issues. And we are very confident that over the long term, or even in the medium term, they will pull back and start delivering on a consistent basis ahead of their peer group. And that's why we're invested in Infosys at this point in time. Given the sell down,